Nice, nice. So, folks, today we're meeting to discuss and have an interesting conversation with Liz and Jenny. So, Liz and Jenny will be joining with us shortly. Until then, I wanted to go ahead and at least bring up an interesting video of Tom Sosnoff when he met with us back in June. He went ahead and had shared a couple of interesting insights about the election. So I just wanted to share that segment of the video, and then we'll go ahead and get started here as Liz and Jenny join us in another few minutes. So let me just pull that up pretty quick, and we'll go from there. Discord. Okay, everyone's joining here. So hey Leon, how's it going? So folks are joining here, and I'm just waiting on Liz and Jenny to join here in a bit. And while they're joining, just gonna go ahead and share an interesting video here from our last session. This was back when there he is. Okay, yep. Okay, this was an interesting.
Bauman had a question.
Let me admit all here, and let's go ahead and share the screen here. This one was admit. Share my screen. Share sound. Share. Okay.
Helps your ability to process risk and all that other stuff. But take that out of the equation, 3 to 6 times whatever you feel the passive rates are.
Thank you. Cool. No, that was a really good question, Leon. I'm going to move on to Bauman. Bauman had a question. So Bauman, you're unmuted.
All right. So my question, Tom. First of all, thank you very much for this session. My question goes to the election day. In 2016, we saw some unusual movement, like when the results got declared, the market went down almost over 1,000 points, and then there was a slingshot. And so my thing is, what kind of trade are you planning to put in this current November election day that could, blow the, profit out of proportion?
So I remember the 2016 election quite well. We were doing a show that night, and then I went home and I traded until like 2 in the morning. And I cried. And then after I found out Trump won, I cried myself to sleep the rest of the night. Um, but uh, but I traded that whole night, and so to be to be fair, like volatility started at a much lower level, and now I think you're going to have a much higher level to start from. So I think it's going to be a very different picture. Also, I think something that should be pointed out is that right now the market is already. I'm not going to say it's accepting the fact that there's going to be a change, but if you look at the betting sites, Predict It specifically, or other betting sites like that, Biden has a pretty significant lead, and there's a reasonable amount of change already priced into the market. Now that said, I'm going to treat it like it's a binary event, like any other binary event. I actually don't think we're going to see what we saw in 2016. I think that was a little bit of an outlier. I think we may, because of 2016 and because of that crazy move on election night where we dropped about 120 points and then rallied 100 points right afterwards, because of that night, I think you're going to see crazy heightened volatility. I think you're going to see puts and calls both be in the stratosphere the day before. And I'm going to treat it just like we would treat an earnings play, just like we would treat a binary event. And I think there's going to be enormous opportunity in the very far out wings of maybe selling some premium. I'm not at this point going to play it directionally because I think a lot of the direction may already be priced in by then. So listen, we're going to do a show that night, so I'm going to be talking about everything we're doing. But I feel like it's going to be very different. I think in 2016, the prices of the outlier moves were way too cheap. If you remember I don't know if you remember the option prices, but they were pricing front month vol was about 14, 15, and back month the back outside wings were only like 18 or 20. And this time it's going to be like 40 or 50. So I think you're going to see a very different world. And I think it's going to be really hard to make money unless you play it pure direction, like static delta. And you want to bet up or down just based on, whatever you think's going to happen. I don't think you're going to be able to buy premium and make money this election.
Okay.
With that, I'd like to go ahead and just welcome everyone here to our community. Let's go ahead and welcome Liz and Jenny here. It's great to have you all here today. And uh, just a little bit of a roundup for everyone here that's joining. We are a community of traders. We originally started from Dallas, Texas, and we have grown because of the power of Zoom and COVID, where we now meet virtually. um, we pretty much run a Discord community where we have conversations and discuss strategy around premium selling trades. So we are fortunate to have folks here join, and those who are new here in this community, and by the way, we have a lot of TastyWorks and Tasty Trade fans here. So my goal here today is we have Liz and Jenny, so let's spend this quality time chatting with Liz and Jenny, and let's have that conversation. Most of the content is already on Tasty Trade, where we can easily access that. They come on shows. They have beat Tom Sosnoff on trades. So we're fortunate to have them here with us. So with that, I'm going to pass it over to Shri, who will, at least introduce Liz and Jenny. And also, we have several women traders that are very impressed with your background, and they really want to at least learn a little bit of your personal skills of making it to this trading journey. So go right ahead, Shri. Yeah.
Liz, hi Jenny. Love you girls. I have been a fan for 2+ years. I watched you. I have seen you on Twitter, on Tasty Trade. Love you both. I just wanted to open up with that.
Oh,
Um,
thank you so much for having us. We are honored to be here. And did you kick Tom off already, or is he still on?
no, that was a recorded one.
Oh, it's recorded.
Oh, that
Yeah.
was since you all joined a little bit later, I just wanted to share a little video clip of Tom being with us back in June and discussing about the elections and how he thinks it was going to play out, and it just played out exactly the way he said it back in June. So it was like dead on, and he said that on a Saturday with us on a similar call like this. So
That's awesome. That's awesome.
so maybe y'all can encourage us with something similar for the future.
Well, I just want to say hello and thank you all for having us. Like Liz said, we're super honored and excited to be here. I know you mentioned we do teach everything on air, so that's true, and it's on the archive. So certainly we'll take questions, but also we can go over some strategies. We have thought about talking about the evolution of the jade lizard to the big lizard to the spiked lizard. The spiked lizard's become really popular lately with many tasty traders. Which we can go over that if you'd like, but we're happy to answer questions as well.
Yeah,
Jenny, I would like to just give a quick introduction to the both of you. Some of us already know you, love you, are fans. Some of us might not know you both. So I just want to give a quick introduction. So Liz and Jenny are popular superstars of Tasty Trade. You can find them online. You can find them on Twitter. Between the two of them, they have 30 years of trading experience, and they are the real deal because they started from the trading floor and now are integral part of Tasty Trade. And some of if you hear the word jade lizard anywhere online or anywhere else, you know that originated with Liz and Jenny. So these are the people who actually formulated the jade lizard, the big lizard, and the spike lizard, and two moms trading as well. So yeah, for that. So very accessible to the beginner trader in terms of strategies as well as people. Very good teachers if you watch them online. Very approachable. Very funny. Great team to watch and learn from. So with that said, Liz, you were about to say something.
Well, I was going to say, with an intro like this, Cherie, this is amazing.
Yeah, those who know you, I love you.
Well, thank you so much. Yes, Liz and I, we both started on the trading floor in the 90s. So I have my degree in economics, she has her degree in finance, and we went right to the trading floor. And we were there until we started having kids. Liz even stayed while she had babies at home. And then when the trading floor started drying up, we ended up finding the show at Tasty Trade. So we love it there, and we love what Tasty Trade stands for and what they teach, and we love their style of trading.
We do. And, you know, trading is always kind of in our blood. And I didn't miss a beat. So I left the trading floor and went straight to Tasty Trade. So I had both my kids. They were both toddlers on the trading floor. I left when my second child was 2. My water actually broke on the trading floor in the middle of a pit, which was always a good story for those of you who want to look back in the archives. But so we do, and we love it. We love trading, and it's really kind of part of who we are. But what I think this pandemic did, and I think it was Mitt who said this earlier, what this pandemic actually did for trading and people connecting like this is amazing to see. So when on the trading floor, I would be standing next to or in a pit of 100 people, and they were my competitors. I had to be faster and stronger, right? Where now this whole thing is fantastic because we're all out there helping each other. We want everyone to win. It doesn't have to be who's faster or who's going to take the most of it. What the pandemic allowed us to do is have a network of people that we can all learn from and be better traders because of it.
So Liz, I've got the chat open and I see some questions. So if it's okay, I'll answer some questions. I'll read some questions from the chat. Is that okay, Mitt and Shri? Or do you want to?
That's fine. And we were going to help you with facilitating those questions. So and anyone that wants to talk in person, just feel free to get on video, have that face-to-face conversation with Liz and Jenny here. and get that conversation started. I think it's crucial we have legendaries here to kind of give us their insights and talk to us. So let's have that two-way chat communication here open. So if you have a question, just a little raise your hand. I'll just unmute you and get started.
And I would like to say this too. I know you said
Yeah.
this. You do a lot of the stuff is kind of digestible on the website, and we
Yep.
do it over and over again. The other thing that I want to say is that Jenny and I do take live tweets, and they come in during the show. So we're accessible always. If you ever want to talk to us or another community, you can reach out to us however you want to. So there's lots of other ways to do it as well.
Yep.
So I see one of the first questions that came in. What are your takeaways from the best and worst years, recent years if possible? So what have been our takeaways from best and worst years? I think that's a great question, because that's the kind of stuff that you may not get on the show, right? If you want to learn about a certain strategy, you can search in the archives. So yeah, some of these questions are great, Liz.
Okay, so my takeaway, and I guess I'll jump in first, is I say it on the end of every single show, trade small, trade often. So my biggest losses have been when I get way too big. And I feel like that's every trader's. There's been, since we've been on Tasty Trade, Jenny and I multiple times have been like, we got this. We're just going to do, this is the trading strategy. It's going to be this one. We're going to put them all in. It works until it doesn't. And then your size gets a little bit big. So, you kind of are always evolving, always learning, and trade small, trade often.
One of my biggest losses yearly of all time was trying to think I knew something about volatility and trading the VIX futures. We really, and Liz too, I can speak for her as well. We really learned our lesson on trying to predict when there would be a boost in vol and playing those VIX futures. I really barely trade volatility products anymore. And I think we learned the hard way that those are not the best products out there to be trading. What do you think about that, Liz?
No, it's interesting because when you started, I was like, we're volatility traders. We chase volatility, but we don't trade volatility.
Like we would try to, inventory the VIX or get long VIX to offset some of our short premium and some of our short positions, thinking, oh, well, if the market falls, well, we've got some of this to help us. Or every time the VIX dropped to 13, we think, oh, 13, let's buy a couple futures and we'll sell it when it bounces back up to 15. And so that I think was a lesson learned.
Sorry, Tom's recording where he said that 2016 election, that's exactly what it was. We were inventorying volatility. We thought we had it locked, and then the next day it was all gone.
No, but I mean, it was long before that, I think, because we started at Tasty Trade in 2011. But and Tony would always say, oh yeah, you can't play that volatility game. And I remember even Robin, back when Robin was trading with us before she was working at TastyWorks, we all kind of thought, oh, we've got these magic numbers in our head of where VIX goes and then when it pops. And we were trading the VIX futures and got a little too big with that. So I really don't even do that anymore. Also, I think what I've learned over time is that you have to be willing to make changes to your trading, make adjustments. And that's kind of how the Jade Lizard was invented, because we were selling strangles, iron condors, and kept losing on the call side. And that's when we created the Jade Lizard. So you have to kind of, roll with the market and make changes with what the market's giving you.
Yeah, and even though we did go with the Jade Lizard on the road, we when we used to be able to go and see people and actually in person, everybody would tell us that they love the Jade Lizard and that it's a great addition because you can't lose to the upside. And it's so funny because even though we created it, we kind of got into a route where like, well, this doesn't work anymore because things are at their top. Why cap my upside? So you do have to kind of always be able to alter your trading strategies.
Cool. So let's I think we have Money Espresso who wants to talk to you, Espresso. Go ahead and unmute yourself. Yeah, go ahead and ask your questions and then we'll go back to the chat. Yeah.
Hey Liz, hey Jenny. So I'm a baby when it comes to trading. So what advice would you give to someone like such a beginner such as me?
You want to go first, Jenny?
You can, and then I'll follow up.
No, I was going to say, so welcome. And I think it's fantastic that someone so young is interested in trading. And I think the biggest piece of advice that I usually give people is just do it. I know that sounds crazy. Use very, start small, learn one strategy, then build from there. If you learn how to sell a put, then you can, add the call spread or things of that nature, very small, and just do it. Because I think people are trying to do, whenever I look at people trying to research and say, oh, if I would have done this or if I would have done that, if you put a little bit of money, your own money in it, you will learn almost instantly, because once you have a little bit of skin in the game, things start to sink in just a little bit more.
And I usually, my advice to people who are starting out and just getting used to options is find low price products and sell out of the money puts. That's what I would suggest. Find low price products to sell out of the money puts in, because if they're low enough price, you start small, you can't get hurt too much. And then I think that's a good way to learn. I've helped a lot of people in my neighborhood during COVID start learning to trade. They would find products that they like, sell out of the money puts. And I would actually, instead of following our mechanics of roll at 21 days, I had them take, see what happens at expiration, take assignment if they're puts in the money, just to see how everything works. I think you get a better understanding of options if you actually go through assignment. Oh, now I have the stock. Well, let me sell an out of the money call against it until that stock runs through that call, and then let that call away your stock. I think actually going through the process of exercise assignment and seeing how options works gives you a full understanding of them, rather than some people, if you're just following trades but not understanding the mechanics behind it. I think it's harder for people to evolve in their trading then.
Right. No, that's a good question. But Mitt, I'm going to let you manage the chat, because there are so many questions, Jenny. We couldn't even.
Yes. I thought that's how we're going to play it. Yeah, I'm going to kind of go through that. Leon, go ahead and ask your question.
Yeah, hi, Liz and Jenny. This is Leon from Profit Makers. My question is, how did you guys discover the jade lizard? Was it by accident or just something you thought would make sense? And then why the name?
Well, the jade lizard, there's a couple of reasons for it. I'm just going to give a brief overview of it. It's traditionally selling, a 70-cent put, an out of the money put, and a 30-cent out of the money call spread. So you've got both sides you're selling premium on, and it takes advantage of vol skew. So that's kind of where we kind of back ended into it a little bit. We were done selling strangles and having everything run through our strangles. And then when the product went up, all the volatility got taken out of it, and it was much harder to defend. So by just starting with the jade lizard, if the product creeped up, we were profitable. So that's kind of where it came from, but it does take advantage of the vol skew. And the name, Jenny, why don't you tell where it came from?
So we were doing this strategy, and the viewers wanted to name it because it didn't have a name, and it was a newer strategy. So we had the viewers submit names, and then we let them vote. So a viewer named it Jade Lizard, and it stuck. I mean, the P&L graph looks a little bit like a lizard. And I like what Liz said about managing losing puts versus managing losing calls, because when you're selling a strangle and something's going up through the call side, typically there's no volatility, and it's very hard to fight that and defend that, versus if something drops down through your puts, the product's dropping, and usually get that spike in volatility. It's much easier to defend that, to roll down your call or call spread and defend that. So we got tired of managing those losing calls. And we also saw that when we were selling strangles, sometimes because of vol skew, we could look and there would be an out of the money call that was pretty inexpensive to buy and cap our risk. And so the Jade Lizard, our first one was in Facebook, and I think it was back in 2013, maybe.
Yeah, it was a long time ago. Now, Jenny, the funny thing is you don't remember this, but it was supposed to be the J Liz, and it was hard for people to say J Liz. So it went Jade and then Lizard. They just added it on.
And it worked. So it's fine, and it's stuck. So it's good. Now lots of people are using it. So
yeah, it's a good strategy.
Nice. Okay. Mike KQ, did you want to ask your question verbally? You there? Okay, let's skip. I guess Mike Green, did you have your question? Okay.
Well, we could just read his question. He said he's asking, "You think the Grinch stealing spy miss this year? Are we rallying on a price supply demand squeeze of shares on passive funds of funds?"
Okay,
Yeah.
Mike, I wish somebody would answer that question for me because I don't know why the market does what it does. And even if you gave me the information in advance, we don't know what it's going to do. We're probability traders. So there's a probability of everything happening. You know, you've got a standard deviation, 2 standard deviations, and so on and so forth. Even if you gave me the news ahead of time, I would have no idea where a product was going.
And honestly, I was on a Zoom call on Saturday with a group of traders. One trader gave all of his reasons why SPY is going to hit, why, you know, SPY is going to be 500, why the SPYs are going to go to 5,000. And then a trader gave their explanation of why we're crashing after the new year starts. So everyone has their own opinion. And really, I mean, if anyone could explain it or predict it, they probably wouldn't be trading. They would be living on a beach somewhere.
Correct.
Yep. I agree with you on that. It's that's why I didn't understand the question where it was going. Eddie was asking, so Tom has answered the question for us in the past, whether Tasty Trade would go public.
I don't
And
think
he's not looking for that move at all. He doesn't
I-
want to be in that territory.
That leads to another question I
Yeah,
had. Like,
yeah.
oh, I'll ask this question and I'll read off MYKQs. But what do you guys think about IPO companies that IPO? So they IPO and then you have 2 weeks of volatility, and then the options come out. Do you guys ever play those?
Yes. So I mean, it's fun to watch as these stocks come out. We've had some crazy ones this year. There's been a lot of IPOs, and I know there's a couple other ones that are coming out in the beginning of next year. We're looking forward to Roblox. So I do like looking at them, and they're fun to get into, but I like to trade the options. So it's real tricky for me. The only time I've ever tried to get into something before the options came out was Facebook. And once again, Facebook is, you know, super, super high right now, but it IPO'd at about 30 and then went straight down from there. So just a little FYI, I'm better off chasing options instead of or trading options and selling premium instead of ever knowing where the stock is going to go. But I like it I think it's fun for me and it becomes something that's part of my integral list once it's a little bit more liquid and the options then have when they're not cash secured.
Right. Right. So nowadays we get the options quickly. They come out within a week now. It's not like it used to be where we'd be waiting so long for those options to come out, but then they're not quite as liquid. I know when snow started, everyone wanted to look at snow and the options were really wide. This week, Airbnb, people have been trading it. Rocket, we traded Rocket this week. We've been trading that for a few months, but that's been out for a while since the summer. But we do like trading them. It just takes a little bit of time for those options to become more liquid and then to have decent margin.
Right.
Well, thanks. Okay, so from my KQ, curious on the thoughts of what to do once your out of the money call goes in the money. Hold, roll to a higher strike, or roll to a higher strike for the same number of contracts and take profit.
Is this in regards to a covered call?
This sounds like a buy side call. Sounds like you're out of money. Yeah, you're out of the money call goes in the money, so they're in profit. What do you guys do buy side a lot, or is it mostly selling?
I'm looking at that same question and I would have answered it from the point of a strangle. That's what it looks like. Because if I'm selling an out of the money call and it becomes at the money or in the money, that's when you have to take ownership. You're either going to roll up your untested side, which means the puts, or you're going to roll it out in time. So that's just kind of tasty trade mechanics of selling a strangle. But to Jenny's point, if it's a short call that's against a stock, that's a completely different question.
Right. You called it buy side call. What do you mean by buy side call?
I just mean buying. It's not clear what he's asking. I don't know if he's selling a call or if he's buying a call.
If he said take profits, I took it as maybe he's selling a call against long stock, like a covered call. And there are lots of people who've called short calls against stock and they don't want the stock called away. So then as it's approaching the call or going through the call, that's when I would roll the call out in time and up to give yourself a little more profit potential and move it out in time. That's your only opportunity to really move it out and up before it gets too far through your call. But otherwise, if you're not attached to that product, you certainly can take profits.
I just want to say something you said, out and up. So otherwise you would never stay in the same cycle and go up. Otherwise just paying debit for it. So out in time and up, just to kind of go with her on top of hers.
And let me move on to the next question. I think, Tom, do you want to ask it? Should I read it out? Feel free.
Hey, sorry, I'm driving, so I'm not going to put my video on. I had a couple questions. Another one that I have, and I'll go to the other. First one was, what are your favorite kind of market for trading days, and what are your least favorite trading days?
I'm sorry, can you repeat that? Favorite trading days just in our history or just in general?
In market conditions.
Oh, in market. Yeah. Well, we love volatility. I know we had one year, in the last, we've been with Tasty Trade for 9 years. I feel like we only had 1 year where the market really didn't move. Like we had one great year where it didn't matter where you were selling strangles, like SPY, IWM, Qs, whatever. We had 1 year where I felt like it worked all year long, and that was amazing.
I honestly, as premium sellers, we like volatility, so I like a little bit of choppy action. I want two-way action to keep the volatility up, but I don't want to crash to the upside or the downside. So in full disclosure, I like down markets, I really do, because it gives us that inflated volatility, but I don't want it to continue to keep going down. I want it to give me a little bit of volatility and then chop out. That's my, as a premium seller, that's my perfect conditions, is we're getting the volatility, but we're getting the two-way action. So you sell premium, you're getting a little bit of an up move, you can take it off. So that's the ideal situation, because we're never playing for a major move in one direction or the other. That's what hurts us as options traders.
That's great, thank you. I saw some interesting stuff in the chat about different days of the week, and it does seem to be that there's some days of the week do behave in some patterns there. I don't know, that's not a very sophisticated question, but I'm curious if you guys have any, like shop talk about that.
Certain days of the week? No, I mean, we've been trading for so long every day, and I really don't notice, too much of a difference in days of the week. Do you, Liz?
Well, I'm actually kind of chuckling. I didn't see the question in there, but I wonder if it's the old, do you remember from the trading floor, they would say, at what point on Friday are they going to take the weekend out of it? Meaning that, so if you're premium selling, there's X amount of theta per day, right? So that's an actual day amount, not a trading day, a day amount. And so we didn't know, you never knew when the premium was going to come out Friday or Saturday and Sunday at some point during the weekend. So I was kind of chuckling when you were reading that, because I think that might be what they were referring to.
Well, and I also think back before we had our rule of, rolling at 21 days, before the research team really has, shown the results of how important it is to roll at 21 days. Before that, we'd have people trading weeklies. We'd have people, we've got the SPY options expiring Mondays, Wednesdays, Fridays. So people would be selling Wednesday premium on a Monday, and it maybe was more meaningful then, but now that we're rolling at 21 days, I don't know that it matters.
Yeah, I don't think it matters much either. That was a good question.
Gotcha. Yeah, just with I've been doing some for me uncovered calls on AMD and Apple and Palantir and Fastly, and so the question was oh, should I roll on Friday or should I wait and see if they gap up on Monday? In the last couple of weeks, they have gapped up on Monday, so then it's been a good time to get back into the PMCC. But every week is different. We just kind of can fool ourselves, right? Fooled by randomness, as Taleb would say.
And you know what? Do you know what's fooled by randomness? If you always do it, then always do it. So it'll come out. I always, Jenny and I trade in our show account no matter what between 10 and 11, Central Standard Time. So sometimes it's better if we get out on the open, and sometimes it's better if we get out at our time. But if you always do it, then it's going to come out in the wash. Sometimes it'll be better, sometimes it'll be worse.
Shri, you have a good question. Do you want to read that out?
Yeah. So listen, Jenny, what is the average? Again, I know that it's going to be over a range. What's the decent range that a person who is not trading full time, but it is decently invested in this options trading process, who has been into the process for a couple of years, what's the range of annual return that they can expect?
That's a hard, Sheree, that is such a hard question to answer.
I realize that, yeah.
Well, because I mean, I've been trading since I was, in my 20s. Okay. And every year has been a completely different year. So, and I know we're getting to the mechanics and we're slowly churning it, and a lot of things have changed, but it is such a subjective, answer, being like, what are you trading? What are you doing? So if you look at, and I know Tony Batista does a real good job with this. I don't hang my hat on it too much because it's kind of in my head, but if you're looking at your, what is it? The EXT number, that's approximately what you can get. So what you're putting into it and your EXT number in there, which is your per day, is reasonable return. So somebody who's got a smaller account, but isn't taking as much risk or is taking more risk could come up with a more, but that's a legit number that you can look at and say, okay, that's expected.
Right. And you're supposed to, assume that you could get about 25% of your EXT number. And so, but again, some people take more risks. So I know Fazia, if you're familiar with Fazia, she collects more. She does, trades with bigger collections than I would do. So her returns might be better because she's taking in larger collections, where I'm taking in, I'm getting, higher probability options further out, lower deltas, where my returns might not be as high, but I feel like it's, less risk in the portfolio. So it kind of depends on your strategy. So it is hard to say because and another thing, we all know the rules, we all know the mechanics, but we all get in our own way. So we all put on trades that maybe we shouldn't trade, or maybe we get too directional, or maybe we get too big. And so we put on trades that can maybe help us or hurt us one way or the other. Like Liz said, we've been trading for so many years, and every year is different.
And so you can kind of get in your own way, and there are the rules and there are mechanics. And if say you were machine trading and you're removing all emotion from it, you're going to take 20% of your EXT number. You're only going to sell when this, but I don't know a trader in the world that can do that. I do want to respond to somebody that was right underneath yours, Shree. It was from Mike Ox, and I think this is a good question. So is this stuff not gambling? And it's a serious question. So Jenny's got a good friend who's, well, he's our friend, I guess, but he's married to a good friend of ours who lives down the street. And so he trades options, and he trades them, I would say, as a gambler. Selling premium and giving yourself a high probability of success and capping your upside is a quant game. It's the smart man's game. It's being the house, not the gambler. But if somebody's going out and buying options and thinking they're taking a chance, that's the gambling.
Yeah. Actually, a lot of things ring a bell from when you guys are answering the questions. Since I have the mic, let me quickly throw in another one. And so do you guys see, you are two women who have been trading for a great number of years among a group of big men. And I still hear the statistics that 95% of traders are men. So do you see a very different approach when you sit back and see how you guys are trading versus how the men are trading in Tasty Trade or anywhere else? Do you guys see a difference? And well, it can, I'm sure it's for the better, but.
Cover your ears. All guys, cover your ears. Women make better traders.
There we go.
Well, I just think we don't let our ego get in the way, where it's not like, now, how about now? How about now? I wanted to short Tesla here. Well, I'm going to short it here and here and here. I think we're a little more even keel, and we don't mind taking a loss. You'll see us on the show. We don't mind taking a loss and say, you know what, that didn't work out. We're going to take this loss, and we don't care if we don't have to make the money back in that product. I think that's a little bit of the difference.
And, you look at, I know this is from a long time ago, but, Jenny mentioned Robin. She was one of our first rising stars. I think she was the first rising star. And she was just a methodical accountant. So, and she just said, she's like, my husband made the money and I'm going to grow it. And she just went out there and she, in a very unsexy manner, sold iron condor, iron condor, iron condor. And it wasn't like she was swinging for the fences, and each trade didn't make too much, but she wound up, it was a methodical approach instead of a, and I think Jenny and I from the trading floor still have a little bit of a, hey, I got this. Now we get a little bit too big, but if you're looking at it from that perspective, she methodically just went through it. Same thing with kind of Karen, the super trader from a long time ago.
Right. I mean, but Karen, the super trader, so she made amazing returns, speaking about returns, but she took big risk.
Huge risk.
Yeah.
Thank you.
Yeah, I actually, just to add to that, like, I think there should be a metric out there that that like at least measures your ROI based on your risk. Like it's so vague out there. If you go out there, everyone's like jumping like hawks and I made 200, I'm a better trader than you, or that kind of like, you should be at least weighting it based on the risk that you're taking, right? So
Agreed. Because
Yeah.
it's a lot
yeah,
easier
yeah,
to get $200 out of a, if you're putting 20 grand into it versus,
yeah.
you got a small trade.
Yep.
Correct. Yeah.
Yeah,
Yeah.
yeah, like a risk weighted model kind of thing, that okay, this risk, so if you can optimize the ROI with the lowest risk, that's like the best way to trade, in my opinion. But let's move on to Jason. You had a question, Jason? Go right ahead, unmute yourself and ask.
Hello, guys. Can you hear me, ladies? All right. So, a question about, I jumped into Stitch Fix, I think, with everyone. And obviously, the short call it blew right through the short call after earnings.
Yep.
And of course, the next day I panicked and I just closed it out. And I didn't do any of the mechanics of defending the trade and stuff like that. But I was watching the earnings report, after market close, and when it popped up Stitch Fix, at that point it didn't breach my short call. It was like I still had like $3 of room, but then obviously the next day is when it gapped up even higher. And I was wondering, aside from all the mechanics, like, I had enough cash to just buy 100 shares of Stitch Fix right after market close when I saw the earnings report, and it was a good report. And I was thinking maybe I should have just bought the 100 shares after market close, and then the next day, even if it would blow through the short call, I've been fine anyway because then I'm covered. Do anybody like yourselves even practice anything like that?
Sure. We'll trade stock in extended hours. We have. I mean, it's not, usually we put our earnings trade on, and I don't know about you, Liz, but I'm not always watching and listening to the earnings report. I'll just check on the trade the next morning. But you certainly can, and we have traded stock in extended hours after the market or before the market, so that you could do that. And as far as you closing the trade the next day, that was a good thing, because if you would have stuck with it and tried to manage it like we've been doing, we would have been better off closing it the next day.
Yeah, but what I think what you're talking about would have been right. So, and we don't know what the stock was going to do, but if you have a strangle, so you had a strangle on, and you saw the earnings report after hours, the only thing you can do when the market isn't open would have been buy that stock, because then you would have been long stock, short call. You're capped out no matter where it was going to go.
You just don't know, though, the next day if the stock's really going to go up. It could have fallen down, and then you'd be kicking yourself for buying the stock. So you don't know. Sometimes it goes one way after hours, after the announcement, and the next morning it's another way. So, yes, that would have worked because Stitch Fix did keep going up.
But I do like what Jenny said. You're in much better shape than we are than defending it, because we said, whatever. We know we sold the 45 call. How high could Stitch Fix possibly get? Once again, a trader having an opinion. It's now 70. So
right, and it was only in the 50s.
Yeah. So
I agree with you guys, because after hours is right around 42, and I didn't even think about it until the next day. I was like, oh man, I should have just bought shares, and then I had to let it go. I think at 49 or whatever it was the next day, and I thought, just like you said, Jenny, that maybe it would have just sold off, but it didn't. So
no, I thought the same thing, Jason. I was like, this can't get any higher, and then it was another $7 gap up move. So
yeah, I was like, but and then from obviously I learned my lesson there, and I figured going forward on the other earnings reports, I just started like doing the Jade Lizard that you guys created. So it was like, I can't fool around with these small price under $100 share stocks at 30%. So I was like, forget it. I'll just stick with the Jade Lizards.
Do you know what's interesting though is, and not that I would wish this upon anybody, but you're going to learn more from that Stitch Fix than you will.
I sure did.
Yes.
Well, and back to the question on returns and Stitch Fix, my New Year's resolution is sticking with ETFs because, or if I'm going to be trading something like that, define my risk, because that's happened. This year has been a crazy year where we've got so many products that have doubled or tripled in value, and it seems nutty. So to avoid that, sticking with ETFs, you don't have like that kind of move typically.
So many snap, nonstop.
Oh,
Right.
I mean, you can throw it. They said, what was the statistics we saw today? Somebody tweeted us saying that
95% or something.
Yeah, are making all-time highs.
Yeah, we had a trader in our community, and we had nice interactions, and it's kind of interesting where they're big fans of and she was a big fan of Etsy, ETSY, and she wanted to see that go up for the longest time. So she was selling premium, hoping to get assigned someday and all that. And then the day that she decided to sell a call to reduce her cost basis is the day it decided to just jump up. So it just proves the fact that the market's unpredictable. And then she's in a position where she was ultimately bullish, but now she's not bullish anymore because of the fact that the trade just went the other way, pretty much. So
and that happens. I mean, that email could have come in from Jenny, because Jenny loved Etsy.
I did love Etsy. Well, and the market is so unpredictable. I remember getting an email from someone. I mean, this is before the Apple split. We had an email from someone who said, I sold the 200 calls against my Apple stock. What should I do? And Apple was trading 300.
Trading like 400. It was great.
And we're like, there's nothing you do with those 200 calls. And then that was right before the big drop. That email probably came in January, February. Then we had the drop, and we're like, shoot, now it's right back down to his calls. Crazy. Yeah, you really can't predict it.
Yeah. So Eddie, you had a question. Go right ahead.
Okay, thanks. Hello, ladies. The question I had was, first of all, you got to give Mitt some kudos for promoting your TastyWorks to everybody. He's the only reason why I switched over to TastyWorks. But I wanted to find out how what the valuation of the company is, because here, let me lump a bunch of questions at you. I know we're insured up to 500,000. What about those of us who has a portfolio that's much larger? How do you assure your clients of the security of the portfolio? And the reason I'm asking that is because the way Mitt's been kind of teaching us how to trade is don't go too heavy into margin. And if you want to do full-time trading and make income, 500,000 is not that much to make that income that we need for full time. And if we want to deposit bigger portfolio, how do you guys assure clients of security of their portfolio?
So honestly, I would say that Liz and I are not the experts on what goes on in the office and at TastyWorks. So that would be a question for TastyWorks. And I don't know, Liz and I really, as far as I know, it's the same rules that all the brokerage firms have. It's the same, it's insured the same amount that all the brokerage firms.
But I would argue, reach out to them, reach out to support at TastyWorks. They will get immediately back to you. The interesting thing though, is Jenny and I did not come. Okay. So Tom started Thinkorswim and he started this. So he's very versed in the brokerage. I'm actually, very bad at everything brokerage. I just need the option chain. So we are truly just floor traders that came over. We can't answer any platform questions. So please feel free to reach out. They will hopefully get back to you, or send us an email and we can send it to them.
That's why every time we go on the road, they have TastyWorks employees with us to answer all of those questions, because Liz and I have we've never worked on the brokerage end of things.
Yeah, never.
So, sorry about that. But as far as, I know we've got many large accounts at TastyWorks and lots of people full-time trading through TastyWorks. So,
but I do like what Eddie said though, that and Mitt, I think that he gave you credit for this. Well, number one, thanks, Mitt. He gave you a lot of credit. But, number two, I like that he said you're teaching them not to trade on margin. So basically saying you need to be able to afford the products that you're trading, which isn't a bad way to be.
No, actually, I'm not teaching that in particular. What I'm trying to teach is a lot of folks immediately once they see the amount rise up, they jump straight to portfolio margin, which is great. But first learn on Reg T and at least make sure you know how to manage your positions, beta weight it, and all that before you leg yourself up. A lot of folks that have heavy capital in our community in the profit makers, we have folks with heavy capital. um, uh, the interesting thing is, you can generate income premium selling like just 5-10 delta, and it'll pay you a paycheck, right? So first you have to kind of set goals for yourself, like, do you want just a paycheck? Do you want to like multiply your money? What's your focus, right? And depending on your capital, like I would say an average person that has $1-2 million sitting around, uh, they could just have a paycheck day, and out of just premium selling, way out of the money puts and calls that are least likely to even get assigned, and manage them accordingly. So I kind of guide folks that just understand what your goals are within your reach,
And
and
that is
we'll
the
go.
luxury of a large account. So
Yeah, yeah.
the luxury of a large account is being able to have the paycheck days, where kind of to your point, if you learn how to trade with handcuffs on, which we've said all the time, meaning
Yeah.
that you have these constraints and learning how it works, you'll actually understand the larger portfolio as well.
Yep.
Yeah, Leah, let me just clarify. It's not that Mitt is telling us not to use the margin, but he's telling us to pay attention to margin. And myself personally, I don't like to risk too much because I'm not just playing with my portfolio, but for my family too. So I don't want to go too deep into margin. But I noticed myself because of so many opportunities, and I want to raise a certain level of income. I tend to use 100% margin sometimes. But because of that, I'm slowly moving my account from Schwab to TastyWorks. But I think Schwab insures more than a 500,000, I'm pretty sure. But as I slowly migrate over to TastyWorks, I'm beginning to look at your company and say, how secure is it? Not too many people know about TastyWorks, so I didn't know what type of clients you guys cater to. Maybe just someone who wants to make just allowance, or you cater to some bigger clients too. So
We definitely have a range of customers. And if you send an email to either Liz at Tasty Trade or Jenny at Tasty Trade, we can pass your question along to the right people who can get back to you.
okay, well, I'll do that. All right, thank you, ladies.
And we may see if we can host Scott Sheridan someday.
Oh, right.
Yeah, Scott Sheridan's the CEO of TastyWorks. So yeah, no, it's exciting because the brokerage firm is very close, near and dear to us, right? Like we're talking to the brokerage firm. The bigger ones are just kind of like out in their own space, right? And out of reach. I like the boutiqueness that you all are offering, which is really nice and very good.
And I know you're not too far off. I mean, Scott Sheridan probably would come on. So how many brokerage firm CEOs would come on and talk to you?
Exactly. Like, Tom talked to the group here with us in June. So that was an honor and privilege to have him here. So
Oh, he'll go on again. Just send an email to
Yeah.
Brittany. Tom will come on again. He's home every day. We're all home every day. He loves doing the Zooms.
I mean, we don't know where everybody is. I had him muted while I was listening to him before because I was talking to my husband. I didn't know what he was talking about. I thought he was on.
Nice. That's pretty cool. So anyone else with questions?
Yeah, I have a question here. This is Jim. How many premium discords are you a part of?
You're talking to me? Or
Yeah, is it your Discord, or how many premium Discords should I be a part of if I'm trying to learn how to trade?
I think zero. You shouldn't be part of any Discord if you're learning. Like it depends on your choice, right? There's a lot of folks engaging and creating a bunch of discords, right? I feel that TastyWorks has the right content. Sorry, Tasty Trade has the right content out there. You can just visit their site and at least go through those videos. We have our Discord just came out of a non-profit community. We were serving like homeless with food and all that. So we just kind of build our community of traders, and we vet out things, like we vet out ideas with each other and meet up on Saturdays and discuss trades in our community. And whatever we collect together, we donate to charity, as that's how we operate. Now there's several folks out there running all sorts of newsletter businesses and all that. That's up to your choice and discretion, what you feel comfortable with. But if you want to learn, just learn plain. Tasty Trade has the content out there, and we actually like sit and discuss trades in our community. So
I mean, that's interesting
yeah,
because we working for Tom.
yeah,
He really does try to say, you shouldn't be charged to learn any of this stuff.
yep,
Nothing should be pay to play, because it's all out there. And I think that was the biggest barrier to entry for being a trader back on the trading floor, was the fear mongering, saying it was. I mean, how many times people have told me, I can't believe you're going to do that. It's such an intimidating field. It's such a you can't get in. You can't do this. You can't do that. Where you can, and that's just it. Is there's a tiny little learning curve, and it should be free for everybody to learn. There doesn't have to be like, I know, I'm the expert, follow me. That's not true anymore.
Liz and I have met so many people on the road who have paid 10,000, 20,000, even more, $30,000 to learn how to trade. It's so crazy that's happened, because now it's all easily accessible and it's all free. So usually people they go to Tasty Trade and they think, oh, what's the catch? But it's just all free. And Tom wants everyone to learn how to become financially independent.
yep. And just to add to that, I learned my trading journey back in 2005 time frame. I remember during that time, if you just wanted to learn how to sell puts out of the money, it was like a $5,000 charge just for someone to walk you through selling puts out of the money. And I was like, who in the world charges $5,000 just to tell you that, which is only going to take like 10-15 minutes to describe that, right? Like, so our community right now is in the model. The way we operate, Liz and Jenny, is we're totally free. We actually like strategize, talk for free. We're democratizing the knowledge like Tasty Trade is. So what we're doing is adding a layer to what Tasty Trade does. Is if they want clarification on anything, like we will share our perspective and understanding of how we interpret your videos. And those who want very deep dive like coaching and all that, we're part of a small community where we all contribute 50 $100 a month, and it goes 100% charity. But we're all like engaged in conversations there, so that we don't get bad actors in that group who are just kind of wandering around with no reason, right? We're spending quality time strategizing things. So that's how we operate as a community. Yeah.
Oh yeah, that's awesome. Which charity is it that you donate to?
We have been doing it to Stewpot in downtown Dallas lately, especially during COVID. We've had a lot of folks at Stewpot that are like standing in lines hungry without food. So we just make sure they get food, especially during their they're not getting any money, or they're jobless right now. So, and I admire those who are just going there to get food, right? They're not going there to ask for money. So that's why we feel like that is a basic necessity. People should have food at least. Yeah,
Well, that's so great that your group is doing that.
yeah, yeah. So
I, I
that's
had
that's
I
how,
had like one last question.
yeah. Go ahead. Yeah.
So I just wanted to ask, like, how do you control your emotions while trading? Like, how do you get rid of that FOMO syndrome, or I would say, like, when you're losing money, how do you, not sell everything?
Jenny and I laugh at each other. I mean, because we've, it's just like anything else. We've been doing it it's just kind of like when you learn how to drive a car, you get in the beginning, you're checking everything and over again, checking your mirrors. Now you just get in and you're on autopilot. It's very similar to that. We've done it so many times. You win some, you lose some. There's going to be losses. Otherwise this game is rigged. There will be losses. If somebody says they haven't had a loss, run the other direction because they're lying. So it's just kind of like lather, rinse, repeat. Keep doing it and you get better at it. You get muscle memory from it. Am I frozen?
No,
It's really encouraging to hear that.
Oh, Snell, you're here. I told them about your story about Etsy. We have she's the Etsy lady. Yeah.
Oh, I loved Etsy too. I loved Etsy too, but I didn't make enough in there. I never held on to it this long.
Okay. Sorry, I joined in very late. I was pulled into a work call, and I'm going to go back and hear you guys or ask Mitt about what was discussed and how did it go and things like that. But it's such an honor to have y'all, and I'm just so encouraged to hear and just be out there.
Well, you guys sound like you're in a great group. It's amazing to have kind of people to bounce ideas off of and things of that nature. It's great to see. And we've been on a bunch of different Zooms with lots of different groups all over it. And it's amazing to see how you're going to grow. You're going to grow as traders together.
Now, how often do you meet on a Zoom?
Every Saturday between 1 and 3.
Okay, good. Yeah, I love it. It's incredible. Like Liz mentioned, there are groups all over the world of traders getting together through Zoom. This year has really brought a lot more people and given people a lot more time to be able to learn how to trade and to get in these groups. And it's nice that so many people are getting together.
Yep.
So talking about that, Jenny, how much do you think the retail trader curve is just beginning, or do you think with all the Robinhood and everything, do you think the retail trader curve, the adoption curve, do you think are we in the middle of the curve? It's going to go down, or it's skyrocketing?
I think retail trading is in its infancy.
Okay.
Yeah, I think it's just starting. People who I keep hearing people who knew nothing about options just talking about, oh, I just opened an account. It's crazy. The amount of accounts that I keep hearing of people opening. Usually they'll tell me, because some of my relatives, my cousin, I was telling Liz, like my cousin, another relative, I have two, my brother-in-law. I mean, I don't even know if they know what I do, but they both told me, oh yeah, I just opened an account at Robinhood. And I'm like, well, you could look at TastyWorks. And so then they switch over and they say, oh my gosh, I can't believe what a great platform this is. But I think it's just starting and it's spreading like crazy.
How do they not know what you do? Do they not know you have so many fans?
Can I ask a question? So when we're selling calls and we're selling puts, someone's buying them, right? Someone's buying calls and puts. So if we're like beginning trader, we're going against other people who have a lot of knowledge and skills and has been doing this for a long time. How do we win in that game? Just got to be lucky, or using social arbs.
Well, Eddie, there's just it's an electronic book, and there are so many orders going in. Just because you're doing one side and someone else is doing the other, you don't know what else they're doing. So it's not necessarily someone's doing the exact opposite trade of you, and you both think you're going to win and you have opposite trades. They could be doing something else against their trade, and everyone could win if we just place high probability trades and give ourselves a better footing. Over time, that we're better off.
And if you're sticking with liquid products, there's so many players in the game. To Jenny's point, if you're staying with a liquid product, just think SPY. If you're selling premium in any direction, somebody's always willing to take the other side. So if you think you're going to lose on it, flip the cards over. You can do both. That's why this game is so interesting, because you can trade anything you want to in a liquid product. And there's so many people. So if you're selling a call and a put, it's not an individual person that's taking your call and your put. It's probably somebody here and somebody here, and you're a part of a larger order.
Yeah, I get that question a lot of times, especially when I do those crazy trades, like when I sell a put on Tesla at $50 or $100 and collect quick premium on those. They're pretty small, but they're like enough to get you like a dinner or ice cream or something, you know. So, and it's like, who's actually buying that for you to sell it to, right? That's like sometimes a gray area for a lot of people. Yeah.
But they might be buying it because they were already short of back. They could be buying back inventory. There's so many different reasons for things. It's just kind of like whenever we see remember those services that would give you unusual option activity? And they're like, somebody's buying. Well, somebody's selling too. So you don't know which direction they're doing it.
Right. I mean, the nice thing about being retail traders is we can do whatever we want. We can choose our trades and do whatever we want. When Liz and I were on the trading floor, we had to take the other side. That was our job. So we stood there until orders came in. And when someone's order came in, we had to take the other side. So that was a situation of, well, yeah, we're taking the other side. That's our job. But then we would always go and do something against it. So we would fill the trade, take the opposite end of the order, but then hedge it somehow.
With your experience and knowledge, why do you guys work for a company, TastyWorks, when you can do day trading all day and make a lot of money?
So Eddie, this is the greatest job in the entire world. For those of you who don't know, I've known Jenny since I was 14 years old, and we really are best friends. I get to talk with one of my best friends for an hour every day, and we forget the cameras are on. So we'd be doing the same thing if I was in a mud mask in the kitchen, or we're doing it live on camera.
Right. And I have to say too, that the amount of emails and that we get from viewers is really, and seeing the viewers on the road, going on the road and having all these viewers say, oh, thank you for doing the show and for teaching these strategies, because it's changed our lives. That's so rewarding, and I don't think we'll ever quit until they kick us off.
We say that until they give us the hook, because Jenny and I, we truly do, don't tell Tom, but we do an hour show a day. It used to be only a half hour, and then we really are with our families and trading our own accounts and doing things like that. So we have the greatest job in the world.
Yeah, it's not all about the money. It's you enjoy what you're doing. Got it. Thanks.
I have a question, man.
Yeah, go ahead, Sundar. Go right ahead.
Yeah. Hi, listen, Jenny. Like, do you generally hold the contract till end of the expiry, or will you guys quit after a certain % of profit?
So the general rule is we sell premium around 45 days, and we roll or close at either 50% of profit or 21 days to expiration. That's the general rule.
Mm-hmm. And there was just a study on it because, you know, theta is greatest as you near expiration. And they just did a study on, you know, why do we roll at 21 days? And so it's greatest at the money, but we're selling out of the money premium. And as long as our options are still out of the money premium, you don't see that big decay in the out of the money premium after that 21-day mark. So rolling out at 21 days, you know, smooths out your position, smooths out the risk. And that's just how we have been trading. We've been trying to stick to that 21-day rolling rule, and I think we've been pretty good about it.
Okay, thank you.
Well, Mitt, thanks so much for having us. And Shri, thank you for the wonderful introduction. So nice to be part of this group today.
Yeah, you guys were wonderful. This was fun. Have you had any other Tasty Traders on? Obviously, Tom, but
we had Dr. Data about.
Dr. Data's good. He's a good one.
You guys are the fun ones, though.
Yeah, no, it's
thanks for coming.
Thanks for coming. It's a privilege having you all here talking to us. And we keep spreading the Tasty Trade, TastyWorks love as much as we can here. And we want to make good traders in this environment. You know, there's a lot of chaos out there. We want to eventually make everyone like a strategic trader. That's our goal in our community. So that's and you all have kind of set the foundation right for us. So really appreciate that. Without that, we couldn't be where we're at. And I'll be frank with you, when I first started trading, especially Thinkorswim, it was like very techie platform, right? Like only engineers can understand to a certain degree. And now with this cool interface at TastyWorks, like newbies are like catching up within a week or 2 weeks in the premium selling environment, which is obviously people have difference of opinions, but it's catering to more individuals in different ways. So really appreciate what you all are doing, and yep, we'll keep plugging away as much as we can. But thanks for being here.
Well, thank you,
And
Mitt. Thank you, everyone.
And thanks for having us. And keep
The other thing that I want to add to that is I think I want to add more women traders on the platform, because it's like just so much of a male dominated world, it feels like. But I think I want to add a lot of girls and women out here. So
for the women on there, and I'm sorry, this is just for the women. And this is not Tasty Trade approved, not approved. It's not Tasty Trade anything, but check out the Women of Tasty Trade on Facebook. It's run by Fauzia. She is not a Tasty Trade employee, but she only takes women, and it's just a very women centric trading.
It's an excellent resource. They have over 600 women members on it now, and she didn't start it. It hasn't been around too long, and every day someone will post questions, look at positions. They're all writing comments, how to manage certain trades. So it's really a great resource for the women of Tasty Trade. So Liz is right. I'm glad you brought that up.
Yeah.
Perfect. Okay.
If you
Thank
need
you.
if you need any male allies, let me know.
She won't let men. But all right, thank you guys very much. Everybody have a wonderful holiday, and hopefully we'll see you soon. Take care.
All right. Take care.
Thanks for being
Thank
here.
you.
Appreciate it, everyone. Take care.
Bye.
Mitt, the closing music.
Okay, coming on.
Oh, it's late. Oh.
Okay. All righty.
Thanks, Mitt, for arranging.
No worries. Thank you all for making it out here. This is a great. It was.
Let me guess.
You're too big. I'm going to say that it was a great turnout for an off day. At least having them over with us on a very off day, and so I really appreciate them taking time.